Hello, everybody. This is recorded on Monday, May the 20th, 2024. I am John Blank. I do have a PhD, and I am Zacks Chief Equity Strategist and Economist. Today, we're going to go through Zacks top stocks for the auto, tires, and trucks industry. This is a global story. We will cover the European, Japanese, Chinese, and American automakers, their replacement parts, tire makers, the internal combustion engines, and a couple truck makers. So, as usual with these industries, clusters of groups of companies, I like to go through the three parts from a stock market perspective in organizing my thinking. Number one, top stocks by market capitalization, just what the market considers the big stocks. Big stocks are held by big institutions, and you as a retail investor can make a lot of headway just thinking through things from their perspective. Top stocks by market capitalization. Part two, top stocks by the number of analysts covering the companies. Analyst coverage from the sell side perspective for the buy side is another interest of demand for a stock. So we'll cover that. Finally, part three, the one part that is used by Zacks Investment Research in its ranking is the largest 1 month percentage change in current fiscal year one earnings estimates. So the change in the annual earnings that has been estimated recently. Obviously, this is a time-stamped thing here on May the 20th, but this is how the Zacks rank works. A little short term. So part one, part two are much more long-term investing styles. Number three is somewhat of a trading style. So keep in mind, these are my views. I do have a PhD, but they are not necessarily the views of Zacks Investment Research. I'll let you read the rest of this at your leisure. Okay, so tables with tickers, the company name, and market capitalizations. These are all dollar millions, and these are the Zacks industry codes right here. So this table here is the go-to start point for this beginning summary slide. Auto manufacturers, domestic and foreign, like I talked about, will be in 7 and 8 industry codes. The original equipment manufacturers for those supply makers are 10. Replacement parts, somewhat different. That is for like the used car market. That'll be 11. Engines, internal combustion, there's a couple of those. That's Cummins. Those who just standalone make engines for all kinds of things. That'll be 58. And then, of course, the tire makers are 171. So in these areas, this is the market capitalization group. This is the number of analysts group. And here is my top stops by the largest forward 1 month change in estimates. So this is ranked by the industry codes. You can see 7, 8, 10, 11, and so on. So we are doing this first sorting by the industry code, then by these groups. So for example, here, market capitalization, obviously Tesla has to lead in the domestic automakers just because the stock is so big. You see that also over here with coverage. Tesla is heavily covered, as is Rivian, more covered than General Motors and Ford. Don't forget about PACCAR. That is a truck maker, really interesting thing. Polaris and Lucid. Polaris, of course, that is, the ATVs and snowmobiles. Then you've got things like NIO, XPeng. Those are the Chinese makers. So again, over here, that's by the number of analysts. Over here, just the sheer size of the market capitalization. Some of this is kind of crazy stuff. Some of it isn't. For example, PACCAR has actually got a larger market cap than General Motors and Ford right now. You might not know that. That is a big tell that there's a problem out there. In the charging networks, because these are the truck makers, this is Kenworth and Peterbilt and that kind of thing. So take a look at all these names and tickers. This is where you can come back to as you read through these slides and need to know who the tickers are, what their market capitalizations are, what industry they're in. Very helpful to do this. All right, so like I said, we're going to go first through the top stocks by market capitalization. Number one, the revenue forward 12-month charts by market capitalization. Of course, the revenue, GM's a little bigger than Ford. You can see a nice trend out of the COVID pandemic, hitting new highs for both companies, doing very well. Tesla exploding out of the gates, although you can also see that it sunk back in 2024.
PACCAR, you probably don't know this name, but it has been doing quite well this year. And then, of course, down here we have the leisure providers, Polaris, Harley-Davidson, and Fox Factory Holdings. Probably don't know that. They're in Georgia. They make suspensions for off-road vehicles and bikes and things like that. Interesting company, started in 2007. Now they're a $1.6 billion market cap company. Really interesting story here. So over here, Volkswagen, Toyota, Stellantis, BMW, and of course, BYD. There's your Chinese vehicle. Here's Suzuki, just to show you the difference between that, Li, and BYD, which are Chinese. And again, you can see a topping action with BYD on their revenues. Interestingly enough, but super strong growth along with Tesla, just like that. So down here, Continental, Magna are the big equipment makers. Lear, Autoliv, Oshkosh, and Gentex. Those are the others. Again, really nice pattern here. Most of them are doing quite well. And over here, you've got some names you probably know that. That's Genuine Parts. That's Napa. And LKQ, that is actually their whole name. And then Dorman Products. These are providing replacement parts for vehicles downstream. So again, that's the used vehicle versus the original equipment. Original equipment, of course, new replacement parts for cars that are out there in the marketplace, in the secondary market. Down here, tires. And of course, engines. Cummins is here and Goodyear Tire is there. So notice that Cummins, of course, an engine maker, doing quite well. Goodyear Tire actually rolled over a year and a half ago on the tire making business. Don't know the answer to that whole story. Again, a really nice summary chart, basically showing you that this is in a cyclical upturn, regardless of the interest rate story. And of course, the movement to electrical vehicles, quite strong, and the quite strong replacement car market for vehicles because people are keeping cars on the road longer because it's pretty expensive out there to buy a car. Okay, earnings. Great chart, same names. Again, to some surprise for all of you, you might find that GM has the top story for earnings here. Tesla does not. You can see those are dropping. Fox Factory Holdings, big cuts for them. And then Ford is down here at the bottom. But what you see here, of course, that's PACCAR. That's why that stock's been doing so well. It's all an earnings story. No surprise there. And Polaris kind of coming off that high again. Just like Fox Factory, there's been kind of a huge pullback in the leisure market buying. That should be telling you something. People are not doing the Polaris and Fox Factory Holdings thing anymore. They are doing the truck shipping. So that's the consumption still out there, but not in these leisure markets as much. So General Motors and Ford, quite a different story. Over here, Toyota, an excellent chart for Toyota. And of course, Stellantis doing much better than Volkswagen. Interesting to note this, Stellantis is now in the Netherlands. Volkswagen, of course, German. Over here, Lear is a top pick. Autoliv, that's in Stockholm. And you've got, of course, Sonala on the Continental Tires down here. Interesting to note that they were there and not here. It's just how our system works. Genuine Parts, there it is. We've been holding this for quite some time in large cap trader, not working for us too well, but you can see why I like it. Genuine Parts is Napa, basically. So Dorman and LKQ doing a little bit less well than Genuine Parts, but great stocks to know about. And there it is, Cummins cyclical story here, a little bit of a pullback. Something to worry about, but not always. You can see some cyclicality here as well. Okay, let's keep going. Free cash flow, excellent chart. Look at GM. Free cash flow at GM, probably don't know that story, but it's excellent. Volvo, VLVLY, super noticeable here. Now over here, the foreign automakers have all pulled back from the 2022 highs. This is a different story over in Europe, as you can see, with the United States. Really interesting cyclical pullback on the automakers. I expect some of that is energy market related, and some of that is to do with the strong economy there. Down here, of course, we've got Cummins, and yes, they are throwing up a nice free cash flow story for you to look into. All right, again, keep in mind, you can always go back to that first set of tables to
take a look at these tickers and then come back to these stories. All right, return on equity. I'm not going to spend a lot of time here because it's a noisy chart, but it's worth your time later on. Same as reinvestment rate. If you want to know about how they're reinvesting in the companies, that's here. Then I've got earnings pureness, how much is coming from the actual fundamentals of the company versus their balance sheet. Capital expenditure, really interesting stories here. I will point out Toyota Motor is probably the most interesting because they did a big CapEx in 2015 and now they pulled way, way back. Whereas Genuine Parts, CapEx, crazy nice. Down here, Cummins, done a lot of investment. Always like to find stocks that are doing CapEx because they are building for the future. They have the best and newest platforms internally. All right, total debt, we can also look through that, but I don't find that to be too much interest for all of you, nor do I find depreciation and amortization. So let's get to top stocks by maximum number of analysts. All right, so these are the other ways to organize our thinking, and now we're going to look at actual charts. Great stuff here. This is the price, earnings, and surprise charts. You can find these on Zacks. Of course, let's look at Tesla. All right, so Tesla is reflecting its fundamentals on 2025 and 2024. Really, that's the story of all the layoffs and stuff. You can see that. And is there any buying value here? The answer is no, not right now. Rivian, still losing money here, just looking to lose less money. That's the problem here. This is a story that looks good, but this is negative numbers. They're still not making money. GM, fascinating chart. There's some value here. Whether you believe it accrues and retains itself. Obviously, the market's not pricing it all in because it's at the highs and it doesn't believe GM can keep on in the next go around. But worth noting that GM actually, from a stock perspective, is doing quite well. Ford, nobody sees much here. This has been kind of stagnant for some time, as is the stock. Stellantis, this has been in a really well-managed company, and most of it is priced in, although you see a nice pullback here. Might be a nice entry point for Stellantis, I actually think. And then, of course, here, NIO not making money in China. I learned a lot about these Chinese cars. Here's XPAV also not making money. So here, again, we're hearing about these Chinese automakers. What they share with Rivian, these electric vehicle makers in China, they do not make money. So there's going to be a shakeout here. Want to be aware of the shakeout that can happen in the electric vehicle business. BMW, kind of a confusing chart. Don't like that. If I were to invest here, I would look into Stellantis and General Motors. All right, so what else do we got here? We got a lot of different names here from the covering these stocks. Other ones from the maximum number of analysts. Mobileye, of course, you know that one's an Israeli company. ChargePoint, Magna, BW Dorman Holdings. Here's LKQ. Here's Genuine Parts. Here's Charge, CARG. So what do I like? What do we like to see here? Here's a chart, Genuine Parts, like I told you. Genuine Parts is an excellent chart. It's been in a technical pullback because it hit such big highs early in 2023, 2022, late 2022 has been pulling back. But there's probably nice pattern here coming back out of that. I like this stock. LKQ, probably don't know that name. The earnings system's heading the wrong direction for you. Dorman, a little bit better chart from that earning estimates perspective. All right, so all this considered, there it is. Genuine Parts, probably the look, as well as probably Dorman. All right, let's keep going. Price to sales, so valuation, what the market likes. Price to sales of Tesla at 5 versus Packard at 1.6 and the Harley Davidson at 1 and Polaris at 0.5. GM 4 down in the 0.3s. This is crazy. This is the whole it's not a car company thing. And it's kind of worrisome. Over here, you've got, again, Cummins at the best buyer perspective. That's 1.2. And of course, down here, you got really low pickup on the original equipment makers. A lot of worry about them. So all together, you got a lot of different industries, a lot of different price to sales ratios for you to look into. You'd like to buy cheap and sell high, and you got some nice interesting entry points.
a lot of these perspectives, like Dorman here, for example, is
coming in at a nice valuation for you. We've already talked about that. Okay, net margins.
like to see profitability improving, and of course, profitability is doing really, really well at PACCAR. No, to no surprise, the market cap of that stock is going up strongly. Dorman, not as
Good a story. He had better margins a long time ago.
so keep in mind, you can always learn anything.
Anything here from different types of fundamental analysis. Return on capital. There's Stellantis doing quite well. Like to see that. Keep this chart in mind and come back to it at your leisure. Dividend yield to the 10-year treasury. Of course, if you're a value stock maker, you'd like to look into these charts.
Where is a good play? Something above 1 would be attractive, and the only one here is Ford. So people don't like the business, but they do like the dividend here as a dividend buyer. Magna, worth knowing about. Magna is at a good place for a dividend buyer. Volkswagen actually is at a good place as a dividend buyer.
So keep in mind here, from a valuation perspective, you've got a nice entry point in terms of people overlooking these stocks from an income perspective. Okay, CapEx to depreciation, a little noisy. We won't bother with this. Nor will we deal with total debt and capital. These are things you can look at later. I don't really want to focus on that this time around. All right, so now we got our last section. This is the largest 1-month change in earnings over the next year. That would be, in this case, I expect 2024, even though we're not yet in 2025. So there we go.
What do we like here? Magna looks pretty good. Toyota Motor looks excellent. Toyota Motor is getting upgraded because a lot of hybrid vehicle purchases right now.
That's what happened here. People thought, oh, it's either internal combustion engines for gasoline or all electric like Tesla Neolene. And then, of course, Toyota built out their whole framework around hybrid vehicles. We're in a hybrid vehicle transition period.
People, generally understand they can use both in those vehicles, and that gives them more versatility. So look through all this. Really interesting stories to track and learn about.
And I think it's very worth your time to think about it from this perspective to short term, whether you've got a nice story for the next few months. Cash flow yield, really excellent story here.
Like to see a good number, and of course, GM's looking great. GM, interesting story. They're running the business from a cash market perspective quite well. Really worth knowing about. Some of these, I would focus mainly on these numbers here,
not necessarily the charts, because it's a cash flow yield and you want to take a look at the differences. Enterprise value to sales, of course, this is how to value from a valuation perspective.
If there's any opportunity from this perspective, Dorman, again, like I've talked about, is in an interesting place from that perspective. As are, frankly, companies like Fox Factory Holdings. They pulled back really nicely on this story here. Worth thinking about. And a lot of other interesting places to look into from a valuation perspective. Liabilities, I don't, like I said, care too much about. The quick ratio, of course, not too important. And that takes me to the end. Thanks for attending. I'm John Blank, and I am the Chief Equity Strategist at Economist at Zacks. This is all done for Zacks Professional Services, and if you want to get a hold of these slides, which obviously critical for that exploration story of what we're doing here today, 866-794-6065. Email me for these slides at strategycall@zackspro.com. Find us, I should say, on the web at www.zackspro.com. We also have a LinkedIn page at Zacks Professional Services. We have an email at ZA Tools. However, of course, for this information, this is the critical stuff you need to get these slides from us. We will give them to you. 866-794-6065, or just send us an email at strategypro@zackspro.com. That's it for me. I hope you enjoyed it today. Always, like I said, come back here to this chart to start your story and get your stories right about how to pick stocks within a big industry cluster. Fascinating thing today. I hope you liked it.